All right, about to start the day. You're viewing the 2-minute candles on the ES. I'm actually trading the 5-minute off screen here. You'll see the orders. And we'll see the damage we can get into. We got here, the market's down pretty good. ES down 3/4. Russell down just over 1%, 1.2, and the NASDAQ about 0.95% down. So a down day. What are we looking for, up or down? Who knows?
Trading has begun.
All right, so that's my 5-minute warning. Guess I got to turn that volume down a little bit. I say warning, but it's actually going to trade on this bar. It starts with the bar that closes at 9:30 a.m. All right, so this trader is active, but it won't actually enter a trade until the close of the bar, which means I have another just under 4 minutes to go before I can do anything anyway. This particular algo has done horrible over the last few weeks, just absolutely horrible. But it's all part of the process. You just keep trading, and evidently, lately, you just keep losing. It is, however, within model, meaning I've seen this before. And the short-term stats look nothing like the long-term. It's done nothing but losing, and it's taken much less than the 2.5 trades per day. That is the long-run mean. Definitely going to get some trades today. At least one anyways. Recently, I had done a video on Creflo Dollar of Wall Street, Oliver Velez, and I had mentioned the difference between trading an historical chart on a look back versus live. You might get today a classic example of the problem live, and this is what you need to see. And traders come up against this all the time, especially those that are more responsible and have stops put in. You will come up against this all the time. The traders that don't have stops, that kind of do a mental stop, that they're more discretionary on, and they will break their so-called rules. They tend to not have that problem. They've got another whole pile of problems that you really don't want to have. I guess if you're going to have a problem, you want a quality problem. And as much as you don't want problems, this is the type of quality problems that you're going to get. You can't get away from it. And it's this being stopped out live where you wouldn't see it on a historical. Speaking specifically of this Oliver Velez clown, he's saying you get in one tick over if you're going long on the next bar after whatever. If you've watched the video before, you know what I'm talking about. That type of problem would happen so often. That's yet another problem. But that's the main one, the big issue with his setup that anyone could see if you spent 5 seconds looking at it seriously. And that would happen several times a day. And it is a serious factor with respect to your P&L. It could turn a trade that looks like it's very profitable, can't lose, into very easily a money-losing slug, depending on how you deal with that live. And there's just no way of knowing. You'd have to bring in every single tick of I say every day, but if he's only trading in the morning, you'd have to bring in every single tick of every security you want to trade for days, months, years surrounding the open, and it would just be a whole lot of work. Definitely doable, but you need to do a whole lot more work than what he has ever done and ever will do, because his mission is just to con you into believing his nonsense, getting the eyeballs, getting the money. He's not interested in doing the hard work and actually trying to make you successful. So for myself and this particular algo, there's a very good chance we'll run into all of these problems today. Well, okay, not his, because we already know that problem and we deal with that, but it's the stop problem. And you have to have a plan for that. You have to have a plan for how bad that is, how much it eats away at your profits, and how you can most make your live trading mimic the data that you use, which is end of bar historical trading. As we sit here for several candles in a row doing absolutely nothing. All right, 2 minutes before I can trade on this particular candle, and we get up there much further, you're going to see an entry that it's going to want to take, but it has to wait till the candle closes. That at least cleans up your entries. If you are trying to write an algo that's going to be accurate, your data that you're pulling out, at least this clears up the entry situation. All right, only do it on a bar close. I got a minute and a half left on this thing. And right now, at this level, it wants it. But I have to wait. 30 seconds left. Look at this. Throwing away your opportunity, aren't you? Are you going to follow the algo or not? You want to preempt it? Well, sometimes it works. Because I have a timer, I will preempt it by a second or two.
Entered long.
Now, don't blame me. That thing goes crazy. We will refresh this because we have to get your daily P&L. Not my problem. So you can't lose here. See, obviously, we're dealing with more than one contract. And we have it on autopilot. Hands are off the wheel. Now, live, that stop just
long.
took. There
Winner,
you go.
Winner, chicken dinner.
Chicken dinner. You like the chicken dinner. So you can see the actual live order in the market actually was stopped out a little bit before the algo did. And what you're going to see now is possible discrepancy between the live and what the historical will do. As it stands now, if you did a historical view on this candle, we wouldn't be stopped out. You'd still be long. So I've got to decide what I want to do. This is where we've made money, but the algo is going to show on a historical look as of right now with the candle that is how it is, that you hadn't stopped out and you're making way more money than you really are. Now, in my case, I don't make this determination for another minute and a half. You have to decide how you're going to play it, and then you play it like that all the time. So I don't make this choice or this decision for another minute and a half. And given the fact it's 6-7 points currently above where my stop was, I would just have to forego re-entering. But on a live view, the algo is out. It's not going to provide any more direction. And I'm going to run the historical in a moment, and I will tell you the difference. You won't be able to see it, but I will be able to tell you the difference. So my algo suggested it made 1.25 on that trade live. And I'm going to rerun it. Yeah, 1.25. So the entry was long 66.03 and the exit 66.04 and a quarter.
Entered long.
Oh, it did. All right. I can see why it did enter long. I did get a little lucky there. Sorry, I was just concentrating on what the algo was doing live. I did get a little lucky there where it did call out a new entry, only because it had called itself out and some other factors that I won't get into. But that was very much going to be one of those ones where I would have to decide without any further direction from the algo what I was going to have to do to make sure I was as close. The whole idea here is to make sure your trading is as close to historic as you can get. There'll be a lot of slippage, a lot of live issues, and you do have to understand how the whoops,
winner, chicken dinner.
All right, good day, good day, good day. Now again, we may have this issue again. We cease having this issue when the next bar begins to form. So for my case, it's 5 minutes. So when you're in a trade and you exit on a live situation, you still have to watch the following bar, depending on how or where it closes. You may be forced to get back into that trade. And that is one of the benefits of doing a 5-minute bar. There's several, but doing these, I say longer term bars. A 5-minute bar is not a long-term bar, but most people are trading on the 1 or the 2. All right, 5 seems long to most people. You do have the ability to stop and take a breath every once in a while. So that particular trade was, it's going to call it plus 4 3/4. I'm going to, because I have a minute, I'm going to run the historical right now and I can look at the difference. All right, so it's on a historical look, that 2 trades we did was 1 trade. It got combined into 1 because of this previous bar that I had to re-enter. This is what I was talking about. Total of 4 3/4. I believe the 4 3/4 is what we got for real on the second trade, and we made what, 1.25 on the first trade. By the way, this wants to get in again, it's looking like. in 20 more seconds. So you can see live trading in this case, we made a 1.25 more than what the historical is going to show. It's not always going to be like that. I have no reason to believe that it's going to be anything other than a normal distribution. It's going to get long here. Okay, the way it's run away,
long.
yeah, the way it's run away like this, I'm not going to. Couple reasons. It's really run away on this bar, the one that I'm looking at, not the one you're looking at. And it's just a very low probability of success. So I have the freedom to enter if I wanted to. I'm going to be much lower now. That's sticking with the algo. But why would I want to do that? I'm already ahead of the algo. And now, again, as I was saying, I have no reason to believe that being ahead of the algo or behind the algo is going to amount to much in the end. I'm just going to assume it's a random distribution. You get unlucky and lucky as many times. It doesn't mean it's a wash, not at all. But if you're being close, if your live trades are constantly close to what your historical trades show, you're doing well. I also know the average daily number of trades, the average profit, and all of these things. So I will use those as my determination for times like what we just had just now, where technically it wanted to get into a trade, but we're very much extended on that bar. We're sitting here plus 4.25.
Long. I am covered in loser dust.
There you go. Covered in loser dust. That might have been the first time you heard that. We got to make sure we include that in the final clip. But yeah, it's just a way to throw money away, trades like that, more than likely. Like I was saying, we normally do 2.5 trades on average a day for this particular algo. So we're already there. We were due for a good day, and I do look at it like that because there's so many bad days in a row that it's had. Things do mean revert, and you're going to have an abundance or bad days all nesting around each other. And typically you do the same with the winning days. So we're certainly due. And as far as the daily P&L, 4.25, that's not too far off. And what is it? We've been out of a trade for a few minutes, but let's just call it 9:55. So 25 minutes of the day. Oh, look at there. Oliver Creflo dollared it. My whole day was in the first 20 minutes, maybe. And I'm actually going to go ahead now again and run the historical and see if this last losing trade.
Entered long. Stopped long. I am covered in loser dust.
Oh, by the way, that was just me rerunning it on the, I got to wait for another minute. Just the way it works on looking at the live data, trying to run a historical, but then you instantly get live data in it. It doesn't normally happen because you're not doing these things live. So I forgot about that, and I have to wait another minute to see if that trade that we had still holds. Now, it might say along again.
Entered long.
Yeah. Now, you saw what just happened here. It would have been long up here, but would have stopped out here, right? So we didn't take that trade. So it's logged 5.5, 6 point loss that we didn't take. And that's would have been live because of this candle right here. That was a stop out candle, which on a historical test is not going to show it being stopped out unless you specifically code it like that. So you're seeing, this is why I'm running this. I'm going to post this. This is the real live situation you have when you're trading programmatically and you've tried to build an algorithm that pulls out these trades and you've calculated these statistics and you think you're in the clear, and then you start trading it live and you see these other real world problems coming up, and then you go, whoa, I'm not as confident as I thought I was about this trading system. And that's a good feeling because you've caught the problem. And you'll notice clowns like Oliver, he's just not a serious guy. But if guys like Oliver were serious people, ran a responsible, serious algorithm for real, and their job was to help you, they would tell you these things. But that is not their job, because if you had someone that's honest coming out here showing you live the reality of algorithmic trading on the short term, and how many times the data that you think you see on a historical test is not at all like the live test, Yeah, all of a sudden it's not so appetizing anymore. It doesn't have the appeal. And how is Oliver going to sell his bullshit? Speaking honestly, well, he's not, which is why he doesn't.